Goldman Sachs's latest forecast indicates a strong recovery for the U.S. IPO market in 2026, with total proceeds expected to surge to $160 billion, more than triple the $48 billion projected for 2025. Deal volume is also expected to nearly double, rising from an estimated 60 in 2025 to about 120. The team led by senior strategist Ben Snyder emphasizes that this growth represents a return to normal from exceptionally depressed levels, not a speculative frenzy. They project that 2026 IPO proceeds will reach 0.2% of the Russell 3000's total market capitalization, still below the 2021 peak of 0.3%. The recovery is anchored by four key pillars: solid macroeconomic and business activity, steadily improving CEO growth confidence, a supportive monetary policy environment, and the ongoing appreciation trend in U.S. equities. Together, these factors lay the foundation for the IPO market's comeback. The headline story for this year's IPO market is undoubtedly the debut of SpaceX and leading AI firms, whose performance will directly dictate the upper limit for annual proceeds. Elon Musk's SpaceX is targeting a June 2026 IPO launch with a valuation goal of $1.5 trillion, potentially raising up to $50 billion. If successful, it would surpass Saudi Aramco's $25.6 billion offering to become the world's largest IPO ever. Further strengthening its narrative, SpaceX completed its acquisition of xAI on February 2nd, forging a super-tech ecosystem blending commercial aerospace, compute power, AI models, and social media, which supports post-listing valuation potential. In the AI arena, OpenAI and Anthropic are in a listing race. OpenAI plans to file for an IPO in the second half of 2026, with market expectations valuing it near $1 trillion, and is currently in talks with top-tier law firms. Anthropic has also engaged legal counsel to advance its IPO preparations, carrying a market valuation of around $350 billion. Both aim to raise substantial capital to fund their ongoing AI development. Beyond these giants, high-growth tech companies like design platform Canva, fitness social network Strava, and cloud data warehouse firm Databricks are on Goldman's 2026 IPO watchlist, poised to provide important additional fuel for the market. The year's early performance has been mixed. Veradermics debuted with a stellar 122% first-day pop, while Icon Therapeutics opened poorly with a 17% plunge. Goldman strategists highlight two core risks currently facing the IPO market that could impact the full year. First, heightened market volatility has returned. Last week's tech-led sell-off and global equity turbulence have investors questioning the return prospects for AI compute infrastructure investments, casting doubt on further IPO expansion. Second, software valuations remain under pressure. Software companies still make up a significant portion of the IPO pipeline, and AI tools like Anthropic's Claude Opus 4.6 have sparked fears of wholesale disruption in the traditional SaaS industry. This was evident as financial analysis provider FactSet plunged 10% intraday, with data giants like Thomson Reuters and S&P Global also hit hard. Notably, Anthropic's AI agent technology demonstrates potential to replace functions within traditional software, efficiently handling tasks like compliance tracking and legal document review, core moats for many SaaS firms. This substitution effect further weighs on software valuations. IPO activity, a composite reflection of market risk appetite, valuation levels, and financing conditions, is crucial for sustaining the U.S. bull market. From a microstructural perspective, the IPO recovery is closely tied to increased risk appetite driven by primary and secondary market interplay. This reflects a significant resurgence in demand for risk assets, potentially creating a virtuous cycle. Rising stock prices lead to more listings, which improves capital flows and sentiment, further powering the market. Historically, significant increases in IPO activity, especially clusters of large offerings, have coincided with strong S&P 500 returns. The most active IPO periods are often accompanied by broad, persistent bullish sentiment, reinforcing the bull market structure. Currently, hot IPOs are characterized by lower valuations but higher profitability than most historical periods. This supply of high-quality assets enriches investment options, guides rational capital allocation, and supports a healthier, more sustainable bull market. Longer term, This market represents a convergence of technological revolution and capital waves. The space economy narrative led by SpaceX, combined with the disruptive AI story driven by OpenAI and Anthropic, will shape the market's vision for future tech and attract global capital. Despite current challenges, AI disrupting software and heightened volatility, the robust IPO recovery, underpinned by steady economic growth and accommodative monetary policy, is poised to be a key catalyst for the extended U.S. equity bull market. For investors, the big IPO year of 2026 signifies not just new opportunities, but a shift in market logic, from traditional value assessment toward bets on disruptive tech narratives and future market share. Capturing this trend is key to seizing the opportunities within this capital wave.